All right, let's do a little morning update. We got the payroll number came in pretty good, 531,000. That was above the 400K expectation, and I think the prior month was revised up. So things looking good. Yesterday, I think I mentioned that the 10-day average of the daily flows was just under 30 billion. That's big. That's a big number. Somebody asked me, Mike, what's going on? How did it pop up? How did it pop up all of a sudden like that? I think what's happening here is, remember when we were under the debt ceiling constraint, Yellen had to resort to these extraordinary measures. Mainly what that was not making contributions to government employee pension funds. I believe that's what it was. At least that was some of what those extraordinary measures were. So what's happening now, why we have this big pop, is not because, we had new stimulus or anything. Is because she's making those payments into those retirement funds plus the usual payments that Treasury has to make every month. And actually, these numbers could end up being pretty close to like the real flows once we get a budget and we get out of this continuing resolution. Now, that has to happen. Remember, that has to happen by December 3rd. They also have to raise the debt ceiling again. Otherwise, we go back into all this crap. The point I'm making, and let me backtrack for a second, because you may recall yesterday, me personally, I downplay all this Fed stuff and the Fed meetings and monetary policy. I told you, I look at it in a completely different way, which I think is the correct way. I mean, first and foremost, I should say that the Fed is not looking to raise interest rates. All right? That's number one. That's price setting. Right now, with rates stable, prices will be stable once we get the supply chain issues straightened out. On that note, I just sent out an email showing once again how freight rates just are plummeting. They're really coming down. So, I mean, if you're of the belief that, hey, we got this really acute, intense supply chain issue, I mean, you wouldn't see freight rates tumbling the way they are. So I think that is an indication that some of these problems are beginning to dissipate, or at least the market feels like we are close to a point where some of these things are going to dissipate. And again, I'll just mention that one of the biggest shippers, Hapag-Lloyd, out of Rotterdam, their CEO a couple of weeks ago said, by the beginning of next year, he said the stuff was peaking right now, which I guess is the same as saying like pretty soon it's going to start heading down. And you see that heading down with the freight rates. The other thing is that market's up 300 points today, Dow's up 300 points today, and bond yields are coming down. Like, this is a departure from market behavior that we've been seeing now, for the past 7 months, 8 months. And I think that is telling. And what that suggests to me is what I've been saying all along. Like, once these pandemic-induced price issues start to go away and the Fed is not raising interest rates, rates are going to start coming back down. You also have what I've been talking about is a particular technical condition in the market. And by that, I mean, we are going to have less Treasury issuance this year in fiscal year 2022, which we're in. But you have this massive short position in the Treasury market. That's going to get unwound. That's going to be a squeeze like none other. You also have like a lot of bearish sentiment still, like people screaming that the Fed ought to raise rates, sooner rather than later. I think one of the recent voices crying about this is Bill Ackman, the hedge fund guy. He's like, they got to raise it. They got to raise rates right away, man. They got to really raise rates. Come on, what are they doing? What are they doing? So he must be freaking out today. All these guys, you could tell they're short. They're talking their book. You could tell where they're positioned because the panic is starting to show. What else can you say? The panic is starting to show. Gold is holding up there around 1,800. The only thing that continues to bug me, be honest with you, is the dollar. The dollar's up at levels now, near the highs again. Yesterday, British pound got hit because I guess there was an expectation that we're going to see the Bank of England raise rates or at least talk about it. That didn't happen. Fundamentally, though, if you're looking at it from an MMT perspective, low rates, that's bullish for the currency. I'm not going to get into the whole explanation now. But just understand that low rates, that's price setting lower. And that's non-inflationary, which is beneficial for the currency. You get more for your money. It's pretty easy to understand. It also is a net removal of income via the interest channel. The whole thing. I've done many videos on this. But, the dollar's in demand. You got a lot of speculative. Actually, if you look at the dollar index, if you look at the CFTC commitment of traders, which comes out every Friday, we'll see it again later today. Huge short position, like multi-year short position, extreme level by small speculator. I'm sorry, what am I saying? Multi-year long position, extreme long position by speculators in the dollar index. Now, I've said before, those CFTC reports, they are not necessarily good timing, indicators. They give you a snapshot of what I call market composition, like who's positioned where, what cohort, like are they commercials, are they producers, are they banks, the swap dealers, are they large speculative funds like commodity funds, are they small speculative? It gives you that breakdown. It doesn't tell you when things are going to happen. But to see concentrations, there's value in that, I say. So that's the update for today. So far this morning, I'll have more for you later. And we'll see what happens, man. It could be a crazy day. Who knows? Oh, one other thing I wanted to mention. Put-call ratio. Equities. Very, very low. We had 2 days this week in the 0.6s. Haven't seen that in a while. Both the 10-day average, I sent this out as an email. Both the 10-day average of the put-call ratio and the 20-day average of the put-call ratio now at the lowest level in 4 months. So market getting a little bit frothy, I think, here. That doesn't mean, we're going to get a crash. It doesn't mean it's the end of the bull market. You got, what I've been saying, the fiscal is supportive, the bank credit is supportive, but it'd be nice to get a little pullback so we get back into some more stock. That's it for the morning update, folks. Yeah. See you later. Bye.